So non-QM covers loans like bank statement loans, where we use your bank statements to qualify income. P&L loans, we can use a profit and loss statement prepared by either you, in some cases, or mostly a certified CPA or enrolled agent. DSCR loans are investor loans, where we use the cash flow of the property to approve the loan rather than your income. And also another popular loan type is what's called a non-warrantable condo. These are actually really popular. I get a lot of these that come through. I have lenders that are very good with getting these non-warrantable condos approved. Fannie Mae and Freddie Mac have a long list of conditions, or requirements rather, for condos in order to approve those loans. And those requirements could be anything from, is the HOA in litigation right now? Are over 10% of the units in that building owned by one investor? If more than 10% of if there's a single investor that owns more than 10% of the units in that building, that could be considered non-warrantable. Another one is when too many units in that building are considered rentals or Airbnb, long-term rental, short-term rental. Another one is if there's construction happening, the reason for the construction happening during that time period of getting the loan approved. And then also if the building doesn't have enough money in reserves, right? So those are a few reasons of why a condo can be considered non-warrantable. And Fannie Mae, Freddie Mac won't touch those loans, right? I had a borrower recently that went through Wells Fargo thinking they're about to close, and Wells Fargo said, oh, it turns out that this condo is not warrantable, so we can't do the loan. See you later, right? Couldn't do anything about it, no exceptions made. And that's when I got the phone call from a friend of a friend of a friend referral that said, hey, this guy can do non-warrantable condos. Turns out I have several lenders that are very good with these non-warrantable condos. And, we closed in 30 days. It was, you got to deal with the HOA. There's a lot of conversation back and forth with reps from the HOA to get the documents you need, but it's something that I typically take care of, for the borrower. I try to make things as smooth as possible. But anyway, yeah, that's a non-warrantable condo. That is another type of loan that falls under the non-QM category. Another type of loan is a no ratio loan. So I have a couple lenders that will actually approve you for a primary residence even with no income. They'll basically approve you as long as you have a certain credit score. I think that credit score is a 660 or above, and 25% down. I actually have a lender that does 20% down. So at least a 660 credit score with 20% down. As long as you can show 20% down plus 6 months reserves, that is another type of loan that falls into the non-QM space. So that loan, it's called a community mortgage. I mean, there's a few names for it. No ratio loan, community mortgage, no ratio for a primary home rather. So there's a lot of different types of loans that are covered, in the non-QM space. And like I said, this is usually very helpful for those that are self-employed, that can't rely on their tax returns. They don't have pay stubs. They don't have W-2s. So these are, I would say, if you're interested in learning more about the different types of non-QM programs, I am going to be putting out videos on each specific one. Like I just discussed the non-warrantable condo. I'm going to discuss bank statement loans. We're going to discuss P&L loans. Another type of loan that falls under the non-QM space are 1099 loans. If you're 1099, if you work for a company and you've been receiving consistent 1099 pay for a year or two, I have lenders that will do 1 year 1099 and 2 year 1099 at least. Those are great loans, and the rates are very competitive. They're almost right in line with your conventional. They're a little higher than the conventional rates, but bank statement, 1099, DSCR, P&L, and non-warrantable condos. Those are just 5 loan products that fall into the non-QM space. I even have lenders that will do mixed income. So basically, we can use, if it's a husband and a wife hypothetically, and we need both sets of income. I've done loans where the husband is W-2, but the wife is 1099. We've done examples. We've done loans where the husband is 1099 and the wife can only use bank statements to qualify. So we are able to mix and match. There are lenders now that will allow you to mix and match products, basically, which is really cool. because this is very helpful, once again, for those that don't have traditional income.